Google earnings, Matt. This one from one blowout from Amazon.
Yeah.
Now you got a blowout from Google, but also that you got the price response from Google too, which was obviously much more impressive.
Well, it was, and we're still waiting on Amazon to kind of break out. You got to like Amazon though today. I mean, the market responded up. It sold off a little bit. It held the breakout channel. You got to like that, but nothing like we saw on Google here. Pop and run here on Google. Nice little runaway gap we're looking at here on Google. Looking forward to Tyler's technical breakdown there. But Amazon, Google certainly didn't hit the revenue marks that an Amazon or an Apple did from last week. But I'm putting Google's report up there in terms of the quality of the report up there with all of them. I mean, pick your best report out of Amazon, Microsoft, Apple, and Google right now. It's like they're all amazing, truly amazing reports. And so when you're looking at Google here, they reported EPS numbers of 22.30 versus the expectation that we were seeing there at, I believe it was 15.91. They did surpass that magical 50 billion arbitrary number that we just give importance to, but they did beat that $50 billion number coming in at 56.9 billion. And so a great beat on EPS numbers, a great beat on revenue numbers. They segmented the operating income for the first time out of Google, similar to what they did with the YouTube subscriber growth. And one thing that is happening at the top end of the market from an earnings perspective, and Apple does this really, really well. Amazon does this okay. Microsoft does this really, really well. All of these companies that we call Apple, Microsoft, Amazon, they're all just massive, massive conglomerates with many, many companies in them. Correct, Tim? Like many companies are in
100%. I mean, if you really dig into it, there's so many layers to every one of them.
Oh,
absolutely.
Yeah. Well, they've acquired everything. So,
I mean, you just
right?
think about Amazon's AWS versus their retail. I mean,
AWS
that's one
is
example.
a separate business.
Yeah.
And so what they do is, instead of spinning off all these separate entities, they basically start reporting the income for that specific area of their business. And so now that Wall Street doesn't look at their raw earnings numbers from just an EPS versus revenue numbers and specifically what the actual numbers are versus the expectation, but what they have started to do is they've started to segment all these different verticals at the company level and starting to report their specific earnings on that specific vertical. And now the market, very similar to how we approach Microsoft, we look at Microsoft as that old-fashioned company that we love to write covered calls on and capture dividend, and it's Microsoft just feels like it's safe. But then there's this entire growth model within Microsoft that we focus so much on their cloud-based businesses. And that specific cloud-based business, the growth area of Microsoft, is what the market focuses on for the most part, outside of everything else Microsoft does. They do it with Apple all the time. Apple, segments their iTunes, their subscription, their Mac sales, their iPhone sales. And so the market sees all these different verticals, and they have projection analysis on all these different verticals. And you started seeing that a little bit more with Google here, starting to release operating incomes. They started doing this last year with YouTube as well, and the subscribe and the advertising revenue for YouTube started becoming a very important metric for Google relative to their earnings performance. And so Google comes out today, and they've segmented their operating income, they're segmented their YouTube growth and their advertising. And all of this is now we're starting to see Google a little bit differently, very similar to how we see some of those other big names in the like Apple and Amazon and specifically Microsoft. And so you got to like what Google is doing. It's working. Don't stop it. You got to love their raw numbers here today as well. So yeah, everything's in a celebration mode a little bit with Google.
Well, and we are here on YouTube, I will tell you. I mean, the YouTube stuff was very, very good. They beat their expectation there, but even just quarter over quarter, year over year growth on their YouTube ad revenue is pretty incredible. And one of the quotes I read from their chief business officer, Philip Schindler, who I did not know who this man was, but I thought the quote was really, really grabbed me. He said, "We now reach more 18 to 49-year-olds than all linear TV networks combined." and the amount of traffic they're getting
That's
on
amazing.
YouTube, it really is, if you think.
I don't know about you guys. My 11-year-old, she doesn't watch traditional stuff.
No, they go to YouTube.
They go to YouTube.
Mm-hmm. Or TikTok. My kids go to TikTok too, but
I want to ban TikTok.
well, that didn't happen last year. I don't think we're going to drum
Trump,
that
come
one back.
on.
He could have done that.
Just finish that
Help the
one.
parents out on that one.
Finish that one. Help us all out. Throw us a bone on TikTok.
No, it's amazing though with this stuff, guys. Their ad revenue, their YouTube revenue, they came out, they busted it out of the quarter. Tyler, also they broke out of their range here and broke out of this high channel pattern, base pattern they were in. What are you seeing in the chart now? Are we just overstretched, overextended? What would you be waiting for?
Yeah, I've been thinking about that as you've been analyzing it. The tough thing for me is it's like, what's your time frame? What if this pulls a Netflix? Netflix explodes on earnings. Admittedly, Google is better. I think.
Yeah, I would say that too. Good. I don't think you can compare the two from an earnings perspective, not from a technical. Yeah,
agreed. The reference to Netflix is more Netflix explodes on earnings, and then you have to sit through this pullback, right? And so I think if I'm swing trading, looking to trade this for the next few trading sessions, because it just went from 1,800 to 2,100, it's up $300 in the last 3 trading sessions. I think that if I'm going to enter a new bull trade here, I have to be willing to sit through some consolidation or potentially a pullback, because let's be honest, it is not a clean, low risk entry given how much it's already run. And so me personally, because there's a million fish in the sea, this is not typically a pattern I would trade on the day of the gap, particularly not at this point. I'd rather have to buy it higher after a better setup than chase here personally. I think if I'm swing trading this, if I had to do something, I would just do a partial size. I want the ability to add into weakness. So that way, if it pulls back, I can use that to my advantage. But yeah, Tim, this for me is a tough entry for anything but a long-term investment, because I think you're going to sit through some chop.
Yeah, for me personally, it would be just a wait. I would just wait.
Yeah, I kind of second and third that as well, because I mean, you look at the raw earnings numbers, and it's not gonna like the investor class is not going to be scared away by those numbers. They're looking to add, and they're looking just to park money, and I mean they're not scared. They're in celebration mode on these raw earnings numbers. But from a trader's perspective, I do agree with both of you guys. It's never good to chase when you're just chasing pure momentum. And maybe that's old school technical traders in us, but again, we're gonna maintain systematic processes when it comes to trading. I do think you got to wait for a better pattern. You got to wait for some consolidation, maybe a high base. From an intraday perspective, you got to like what Google's doing from an intraday perspective. I mean, at the cash open, after the positive response to earnings, you had some volatility, but that got shooken out pretty fast actually, and then it kind of just maintained price action throughout the day, just on that rising moving average. So it's a no sell day with a pretty clean trigger, but I still think my point is, you like the daily action today as constructive. You like the fact that the volatility at the cash open kind of settled down very quickly, but at the same time, I mean, you're like you said, Ty, you're up what, 15, 16, 17% in the last 3 days.
It's a lot.
Yeah. Put it on a watch list, wait for the pattern. But yeah, it's a great, I would put it in the with everything else, I would put it into the great category as an earnings report. My initial reaction was, it might have been because I just analyzed Amazon, like literally 5 seconds before I analyzed Google. So I was kind of like in Amazon, oh my goodness, they destroyed the world mode. And so Google's numbers were good, not great to me in the moment, because I'd just done Amazon. But having a little bit of time to reflect, Google posted a very, very, very good earnings report here today. It's not going to scare anybody out. As traders, we be patient and wait for pattern to set up.
I do like it. Your reference to the intraday chart was well put. I can see this squeezing into the close, right? If I'm a day trader, I think this is probably a stock that's on the radar of a lot of people today for obvious reasons. But that's where you have to define what time frame are we talking about, because I think you could build a
Yeah,
day
I'm
trade on
talking
this.
swing. Yeah, I'm talking swing trade. Day trade, you got to love that ascending triangle coming
Yep.
into a clean horizontal breakout as a day trader. I mean, that's picture perfect from a day trader's perspective. But from a swing trade, yeah, you got to let things settle
So,
down a little bit from a swing
and it will give you an entry. It always does. And that's the thing is you go back and you look at Google's history, you look at any big earnings winner lately, and sooner or later they're going to give you a setup. So you put it on your
Okay.
radar, you wait, and it'll come to you.